Hi everyone, it's Jack back with another video, and today I'm going to be talking about Microsoft, which just about half an hour ago released its most recent earnings. Obviously it's an absolute titan of its industry, one of the largest market cap companies in the world at just over $2 trillion. One of the largest companies on the S&P, can move the S&P a decent amount on any given day with moving this business. So it looks like it's going to be a good day for the S&P tomorrow. After hours this business is up around 4% at the time of making this. Still trades at a price to earnings on a trailing basis around 30, which is not objectively cheap, and it's towards the top of its 52-week range, and almost certainly we'll be getting towards that 52-week high tomorrow. It's also up 15% year to date, having a really good year, outperforming the S&P. Is it a buy right now? I want to go through its most recent results, see where it's doing well, see where it's doing poorly, analyse its valuation, and in a bit more detail, decide whether I think this is a buy, sell or a hold right now. Okay, so first a quick rundown of their Q3 financials. Productivity and business processes, that business segment recorded $17.5 billion of revenue for the quarter, 11% growth, 15% on a constant currency basis. Obviously the strong dollar has been hurting everyone's revenue numbers. Intelligent Cloud, that recorded 16% growth, 19% on a constant currency basis for $22.1 billion of revenue. And more personal computing, arguably the worst business segment name in the market, $13.3 billion. That was down 9% and 7% on a constant currency basis. Now, this is the business segment with a lot of the hardware, as we'll get into a bit more in a minute. They typically do bad in recessions, it's more of a cyclical industry. This is not a great surprise, and it is the smallest business segment. Overall, that gave it a 7% revenue growth, which is not amazing for a company that's valued at 30 times earnings. On a constant currency basis, it was 10%, which again is better but not amazing. However, that gross margin, 69%, just keeps getting better and better. 9% gross margin increase year over year, 13% on a constant currency basis to $36.7 billion for the quarter. Absolutely outstanding. Diluted earnings per share up 14% on constant currency basis, 10% on normalised for $2.45 earnings per share. Looking a bit deeper at the individual business segments, productivity and business processes, the most boring in my opinion, just continues to show along an exceptional rate. These are essential for most businesses around the world. Microsoft Office package, the consumer products package, LinkedIn revenue up 8% year over year, which is relatively impressive, and dynamic products and cloud services revenue, the smallest of this, was up 17%. The disappointment here is the consumer side, which has increased just 1%, not particularly impressive, but they now have 65.4 million Microsoft Office consumer subscribers, which really blew me away. I had no idea the number grew that large. Intelligent Cloud, which I'm going to get a bit deeper on in a minute, is attracting a lot of the attention from the most recent quarters. Cloud services and server product revenue up 17%, mostly driven by Azure. Not really the growth Microsoft want, or particularly analysts want, but still pretty strong at this sort of scale. And other cloud services revenue up 27%. More personal computing, which was the real disappointment, was driven down by hardware. OEM revenue decreased 28%, devices revenue down 30%. Xbox content and services revenue, which is making up a decent chunk now, did decent, up 3%, and commercial product and cloud services revenue up 14%. But it's not really where they want to be. I mentioned I wanted to go a bit deeper into the cloud earnings. That is just because it gets so much analyst attention. Everyone knows this is the future of Microsoft. This is the fastest growing business segment by far, and it's going to continue to be into the near future. This is the growth engine for Microsoft going forward, as AWS is for Amazon. Now, it cannot be escaped that the revenue growth, I wouldn't say is drying up, but it's definitely decreasing. A couple of years ago, we were looking at 50% year over year growth. Right now, we're looking at 22% for the whole segment for $28.5 billion. Now, that's still impressive, don't get me wrong. At this size and scale, 22% growth is absolutely fantastic. In a market where it doesn't seem like spending, the companies are guaranteeing capex towards cloud revenue. They're prioritising it for other reasons, of course, with the way the economy is right now. However, this is not good. We don't want to see drying up revenue growth. And at the sort of multiple Microsoft is, I think it's justified to want higher revenue growth. That being said, they have been increasing the gross margin, as you can see by the red circle. Now it's 72% gross margin for that cloud. That is absolutely fantastic. They continue to increase the revenue, albeit not at the rates we want, but still at great rates. I don't think this is something people should be getting massively concerned about. It is absolutely not X growth by any means. This is cloud to some extent. It's proven to be quite cyclical, I think, or at least hardware demand. So I think give it time, and I think the revenue growth will continue at a decent rate. I just wanted to show this, which is a breakdown of some of the largest subdivisions of those segments. And you can see Microsoft Cloud revenue at 22% is one of the largest contributors in terms of dollar amount, and it is also growing at one of the largest amounts. So this is going to continue to be a major driver of this business. And as you can see, the only real losses were OEM revenue, Xbox hardware revenue, device revenue, all hardware, all big box essentially. So we know this is a cyclical industry, and economic downturns, these tend to decrease. And Office commercial products revenue was down 1%. I would call this essentially flat. It's actually up 6% on a constant currency basis. When you look at this across all its business segment, this business is absolutely excelling in my opinion. Azure and other cloud services up 27%. This is going to become an increasingly larger part of the business in my opinion. Overall, aside from the black spot of hardware and gaming, I think this was an excellent quarter across many business segments. Maybe not what analysts wanted in terms of the cloud growth, but still absolutely excellent. These are just some notes from the appendix, which I thought were really interesting, and some of them are actually quite negative. Cash return to shareholders, 9.7 billion to shareholders, 4.6 billion in repurchases, 5.1 billion in dividends, has around a 1% dividend yield. It's not going to be the reason why anyone buys this business, in my opinion, and the repurchases are basically going to cover stock compensation. Even doing that, the share count is roughly around flat as the last time I checked. Free cash flow, this is the big one, down 11% year over year, 17.8 billion. Of course, 6 points of that were for a tax payment, so you can see as above. Cash flow from operations was down 4% year over year, but when accounting for the tax payment, it's actually up 1% on strong cloud billings collection. Now, after accounting for that tax-related payment, free cash flow was still down 5%. Now, in the economy we're experiencing, is this the end of the world? Absolutely not. However, this is definitely cause for concern. We do not want to be seeing Microsoft's free cash flow numbers decreasing, not from the standpoint that it's going to affect the balance sheet. They have one of the best balance sheets in the world, and not from the standpoint of that anything is going to go wrong with this business. It's just, you don't want to see free cash flow going down. You want to see it going up, so they can be a more acquisitive business, so they can continue to invest in their products and services, and so they can pay out to shareholders. That free cash flow number is just not really what I'd like to see. You want to see that going up 11%, which is what I kind of expected to see. So that is definitely disappointing, but not any reason to not buy the shares by any means. I think these graphs really illustrate my view on this well. Over the long term, this has been a fantastic compounder, and of course, quarterly revenue, as you can see on the bottom, year-over-year quarterly revenue growth can be lumpy. There can be periods where it is low revenue growth, sometimes negative revenue growth. However, over the long term, you can see trailing 12-month revenue and quarterly revenue on the top and middle. I've continued to go up for this business. It has been an excellent compounder. In the last 10 years, it's over tripled its trailing 12-month revenue. In just 10 years, at this size and scale, it's absolutely outstanding. Of course, earnings can be lumpy. I actually think this was a pretty good quarter given the circumstances. If we're in a functioning economy, which we're not in a completely functioning economy right now, where inflation will be normal, I think this would be an average quarter, maybe below average, but given the circumstances and the reduction in CapEx spending in many businesses, I think this is absolutely outstanding and proves how essential Microsoft is. And that is not even really speaking about the potential for this business with OpenAI and ChatGPT and that's influence on Bing in taking on Google in search. I think this could be an incredible business to own over the next 10 years. That being said, it is not exactly a well-kept secret that Microsoft is a good business and a stock that many people would like to own. Its current price to earnings is around 31 on a trailing basis, 25 times cash flow on a forward basis, a much more reasonable 26 times. These are far in excess of the S&P 500. It normally trades at significant premiums to the S&P 500, even at today's S&P 500 multiples that are far above the average for that index at almost 20 times earnings and 15 times cash flow. Now, comparing it, well, when businesses trade like such a premium to the S&P 500 because they are quality businesses with excellent gross margins and pretty much earn monopolies, it is important to, I think, compare it to itself rather than compare it to the index because it is far above the average S&P 500 company in my opinion. And when comparing it with its own 5-year averages, it's slightly undervalued on both a price to earnings and a price to cash flow basis, although its price to forward earnings on a 5-year basis typically around 28, 26, not the biggest discount, 34 to 31 in PE, not the biggest discount, and price to cash flow is roughly the same in my opinion. Right now, I think Microsoft is trading at pretty much average prices as it would have been over the last 5 years. It's not particularly cheap, and I wouldn't say it's absolutely expensive because this is a business that most people would like to own. It very rarely trades at significant discount. You can see the year-end PEs for this business in 2017 through to now have never been below 25. It's unlikely to go below 25 without a serious recession, in my opinion. This will always trade at a premium, and so it should, because it's an excellent business. So it's not absolutely bargain basement cheap by any means. It's not even cheap, really. I would say it's averagely priced for what it offers. That's really my summary here. I think this is an excellent business. I'm just not really willing to pay the price now for a business that's growing revenue at 10%, regardless of how good it is, with a price forward earnings around 25. For me, that is just too expensive. I think there is absolutely a non-zero chance we enter recession in 2023, 2024, and I think I could pick up this company a lot cheaper. And if I can't pick it up cheaper, then so what? There are plenty of other businesses. Obviously, this is a fantastic business, but relatively speaking, there is limited area for this to grow, even with ChatGPT and OpenAI and blah, blah, blah. It's a $2 trillion market cap. How big can this really get? We're not going to be expecting 2-3x returns in the next 10 years, and that's kind of more what I'm looking for when I'm paying exceptionally high valuations compared to the index. That being said, I'd love to be proven wrong on this. Microsoft is an excellent business and will be an excellent compounder for many, many people. For me, I would rate it as a hold. If I already own this business, I would hold it. I definitely wouldn't be selling it. However, that's just me. I'm not a financial advisor. This isn't financial advice. You should do your own research and due diligence. Capital is at risk, of course, and buy your own stocks, not just because I tell you. Like and subscribe during the video. Comment down below what you think about Microsoft, whether you think it's a buy, sell, or a hold. Whatever you think, let me know in the comments down below. I'll see you again next time.